Hey everyone, and welcome back to the Finance Zone. The coronavirus pandemic didn't hit all sectors in the same way. While technology companies flourished, others like airlines and cruise ships were decimated. AMC and other theater companies were also severely affected because of the nature of their industries. They offer non essential services that involve people sitting in close proximity. At the same time, many movie studios like Disney and Time Warner were not able to shoot many of their planned movies. These studios decided to push major releases to the relatively new streaming platforms like Disney Plus and HBO Max. As a result, all theater companies recorded substantial losses in 2020, while others like Cineworld almost went bankrupt. AMC, which operates more than 1,000 theaters and 11,041 screens globally, was severely affected. For example, its total revenue in the third quarter of 2020 dropped to $119.5 million, down from $1.3 billion in the same quarter in 2019. In the same period, its total loss soared from more than $50 million to $905 million. Its debt level also soared. Therefore, the recent Reddit-driven rally of AMC stock was described as a way of punishing many Wall Street investors who shorted the company. Similarly, many companies targeted by the euphoria like GameStop and Bed Bath & Beyond had substantially higher short interest. Today, we're going to be talking about AMC stock predictions for this coming week. Make sure to stay till the end and learn about this amazing stock updates. AMC Entertainment, New York Stock Exchange AMC shares have had an interesting ride in the past few weeks. After languishing below $10 throughout 2020, the stock soared to a multi-year high of $20.38 in January of 2021, pushing its market capitalization to more than $3 billion for the first time since 2017. The challenge for AMC is that many families now subscribe to movie streaming apps like Netflix, Peacock, HBO Max, Apple TV+, and Disney+. As a result, most people prefer watching movies from the comfort of their homes. Further, many young people are not interested in going to the movie theaters like the older generation. For example, in 2019, more than 6.3 million people aged between 40 and 49 went to a movie theater. In the same period, only 5.4 million people aged between 18 and 24 years attended. However, the stock has since shed more than 73% to trade below $6, bringing its market capitalization to $1.8 billion. It's only February, but 2021 has already held a year's worth of excitement for AMC Entertainment shareholders. The movie theater operator limped to 2021 with CEO Adam Aron previously having said that the company might be forced to declare bankruptcy if it couldn't raise enough capital. However, on January 25th, Aron announced that the company had raised enough cash to put bankruptcy effectively off the table, giving the stock a shot in the arm. Later that week, the stock skyrocketed as it caught with Reddit traders on WallStreetBets, shooting up to more than $20 a share on a short squeeze. Soon after, it fell back down near its prior levels as traders pocketed gains. Shares of AMC Entertainment Holdings moved higher on Thursday morning on chatter that Amazon, Nasdaq AMZN, could emerge as a potential suitor. Right now, it's just a little more than collective wishful thinking. There are no credible media outlets with sources claiming that talks between the two parties are happening. However, there were reports last year that Amazon and AMC were in preliminary negotiations before talks broke down. There were also more substantiated reports of Amazon in the running to acquire smaller landmark theaters in 2018, but that also faded to black. Amazon would also be able to improve in theater marketing. It also can reinvent programming with its breadth of multimedia connections. AMC in Amazon's hands would be misunderstood by Wall Street at first, but you don't bet against Amazon when it gets its hands on a new toy, or in this case, a 100-year-old toy that just needs to be wound in a new way. But lately, the enthusiasm has greatly diminished. Note that AMC stock is back to $5.60 and the market capitalization is $1.9 billion. This boom-bust pattern has been the same with other Reddit stocks like GameStop, GME, Bed Bath & Beyond, BBBY, and BlackBerry, BB. Folks aren't going to the movies. Most AMC theaters in the US are now open. It was operating 438 of its 593 domestic theaters, 74% as of January 21st. Attendance still plummeted 92% in the fourth quarter. AMC will say that it's offering limited seating capacities and shorter operating hours, but the latter is a reflection of weak demand. Even with its closest rival, Regal, shuttering all of its theaters in early October, no one has ever had a problem scoring a socially distanced seat at the local AMC. Even the Bulls get this. Who wants to be wearing a mask in an even near-empty theater? Movie studios are either pushing out releases or going directly to consumers, cutting out the multiplex middleman. This wouldn't be a problem for AMC if it was a temporary state instead of an actual trend, but what if folks enjoying viewing new releases from home? What if the media companies like dealing directly with the viewer? Remember, check the description and use my Webull referral code for 2 free stocks. Folks aren't coming back to the movies. Nobody opens in theaters on April 2nd. You know who's going to see it? That's right, nobody. There might be a light at the end of the COVID-19 tunnel, but your local movie house can't go back in time. High-def TVs keep getting cheaper, the quantity and quality of content available to stream at home is improving exponentially. Let's talk numbers. Movie theaters reopened in August across the country. Here's how box office receipts have clocked in every single month after that when pitted against the same period a year before. September, down 88.2%. October, down 92.3%. November, down 93.6%. December, down 94.7%. January, down 93.4%. It's not encouraging to see that the best month theaters had since reopening was the first full month of availability. Instead of wooing movie patrons over time, the industry's losing them. We're now 2 months into the vaccination process, and it hasn't created a dinner bell for the projecting room. The consolidation at $5.50 looks like it could be the bottom. Not saying we'll never see this stock below $5.50 again, but for the time being, it's held. In theory, AMC Entertainment, AMC, has all the makings of a top recovery stock. The movie theater industry has been crushed by the pandemic, with revenue down sharply, but audiences should return once it's safe. With the entertainment stock down 60% from pre-pandemic levels, the opportunity for the world's biggest theater operator is evident. But can AMC stock recover? It won't be easy. Management warned back in October that the company could be forced to declare bankruptcy by early this year if it doesn't get additional funding. In December, its own lenders urged it to file for bankruptcy, a move that would likely wipe out shareholders, and earlier this month, CEO Adam Aron said on CNBC that the company still needed to raise $550 million to stay afloat. In other words, AMC is in trouble. And putting aside the high risk of bankruptcy, there's still a number of reasons to avoid the stock, as even in the best case scenario, its future still looks bleak. Shareholders are getting seriously diluted. Like any other publicly traded company, AMC has two principal ways of raising cash. It can sell new shares or take on debt, and it's exercised both of these options repeatedly during the crisis. Even if the company survives the pandemic, these choices will have long-term impacts on shareholders. If the third quarter, which ended on September 30th, AMC had an average of 107 million shares outstanding. By the end of October, shares outstanding had grown to 137 million, and the company filed to sell 200 million shares on December 11th and another 50 million on December 30th, though it's unclear if the company has sold all of these shares. The industry has changed. There are 6 major studios in Hollywood: Disney, Sony-owned Columbia Pictures, Viacom-CBS-owned Paramount, AT&T-owned Warner Brothers, Comcast-owned Universal, and 20th Century Studios, formerly 20th Century Fox, which now belongs to Disney. When the pandemic hit, the only one of these studios that had a high-profile streaming service was Disney, and even then Disney Plus had barely launched and the company had not yet restructured its business to prioritize it. Now, each of these studios, except Sony, has its own streaming service, or one shortly on the way. Warner Brothers has HBO Max, Universal has Peacock, and Viacom-CBS will launch Paramount Plus in March. These new streaming services are shifting the balance of power in Hollywood further away from the theaters, and the traditional window of exclusivity for theaters is falling apart. For Warner Brothers, for example, said it would release all movies this year simultaneously on HBO Max and in theaters. Universal butted heads over the window last spring and eventually agreed to a shortened 17-day period of exclusivity. Disney, meanwhile, has taken the opportunity to experiment with a new format, releasing movies like live-action Mulan and Pixar's Soul straight to Disney+, bypassing theaters altogether. And tech heavyweights, like Netflix, Amazon, and Apple, are only stacking the deck further for streaming. No easy way out. While it's possible that a short squeeze or some other trader-driven activity could drive the stock up further, over the longer term, AMC's prospects look dim. This is not a recovery prospect like a cruise line or even an airline that was healthy and profitable before the pandemic. A year ago, AMC was already drowning in debt and facing disruption from streaming. Personal insight? Hold. It might actually get better. 99.2% of available to be held by the public, they are not being held.